Let's get straight into today's market action. Joining us now are Meera Pandit from JPMorgan Asset Management and Brad Slingerland from NZS Capital. Good afternoon to you both. Meera, I'll start with you. Your take on just the incredible move we saw in NVIDIA today and what it did to power all things AI related, whether it's other semi stocks or the mega cap tech peers like Microsoft, like Amazon, like others that led the gains for the S&P and the NASDAQ today.
We're becoming more constructive on areas within tech. We've seen a really sharp rally, but I think what differentiates what's going on in tech now as opposed to a few months ago is the fact that we're seeing it's not just a macro story driven by rates or driven by recession one way or the other, but it's really about the fundamentals. You're seeing that a lot of these tech companies underneath the surface are making the changes that they need to in order to shore up profitability, and it showed in this recent earnings season in terms of profits. And in addition to that, we're starting to see what are the game changers for the next decade when we think about AI. Now, I don't think we should put too much in the price too fast. The rally has been really sharp, and this is going to be a decade-long theme at least. So we need to be a little bit cognizant of that a very narrow range of stocks is rallying right now, while the rest of the stock market is actually looking pretty fairly valued. So let's look for a little bit of balance as investors.
Okay. And I meant Alphabet, not Amazon. Amazon actually ended the day slightly lower. Brad, I want to get your thoughts on this, and specifically just the investor enthusiasm we're seeing for AI and whether NVIDIA has essentially confirmed some of these big moves into some of these biggest names that we have seen in recent weeks.
Well, I think so. Look, it's still early days for AI. This is going to be with us for the next decade or two, as these big technology platform transitions do tend to last multi-decades, and we're just starting this one. So people are very excited. They can get a little bit perhaps too overexcited on days like today, but the evidence is coming in that it's early. It's a huge investment cycle. There's a lot of ways to look at it, a lot of ways to play it, a lot of other companies providing that infrastructure beyond just NVIDIA, and a lot of companies that are going to take advantage of it and apply AI to their industries across the entire gamut of the economy and be able to use it to drive productivity, to drive deflation, and to increase margins and really boost their business over time.
Meera, I'm wondering if investors shouldn't use this AI excitement, the big NVIDIA move, as an excuse to turn their attention elsewhere. The Russell was down 0.5% today, whereas the NASDAQ was up, I think, 1.7%. And the Russell's down around where it started the year. So, you know, if AI is overhyped, if it's not whatever, is there value to be had at some point in small caps, even though there's a lot of economic uncertainty heading into the back half of 23?
At some point, there will be value to rotating into small caps, but we do want to be a little bit cautious still, given the fact that small caps are higher beta. They do tend to experience worse profit outcomes and worse downside when we do hit potential economic downturns. And we want to be cognizant that we still believe we could be in for a recession towards the end of the year. If we think about broader issues that companies are facing, from higher wages to higher input prices, that has an overburdensome impact on areas that are smaller companies versus larger. So I still think we want to gear towards profitability and gear towards quality, which you tend to find more in the large cap space. But at some point, we're going to find a really attractive entry point for small cap. I think given the economic cycle, we might be just a little bit early.